pen and paper ready, we're hopping straight in. No special hook, just straight value. So today we're talking about gaps. A gap occurs when all buyers and sellers don't quite have a chance to get in, leaving an imbalance on the charts. On a price chart, this appears as between a gap of consecutive candles where one side, buying or selling, dominates, leaving an untested area. And the important thing to remember is that the markets aim for efficiency. Price often revisits these gaps to fill or rebalance them, creating trading opportunities. Now, gaps are created from rapid price movement. They occur during times of high volatility, often during times of news events, institutional activity, or sudden breakouts. And what it does here is it creates imbalances, a lack of opposing orders, as one side of the market, buyers or sellers, overwhelms the other. For a quick example, a strong bullish market will create a gap where price would shoot up and leave no sellers at a certain point. Now you may be wondering, how do I identify gaps on the charts? Well, I like to say the 3 candlestick rule. I want you to look at 3 consecutive candles. The first candle, a strong impulsive move. The second candle, which is also your middle candle, where the gap is actually created. Then the third candle, where the next candle whose wick does not overlap and price does not touch the previous candle range. What you're actually looking for is the gap that lies in between the first candle and the third candle. So it's going to be your second candle there. Now these sound easy, but of course, with trading, everything comes with a risk. Be careful of your unfilled gaps. Not all gaps get filled, especially in strong trends. So be cautious when trading against momentum. Then you also must look out for false breakouts. Price may fill a gap and never reverse, causing losses. But with risk in trading, we also learn how to manage it. Make sure you have good stop loss placement. Place your stop loss outside the fair value gap or near your swing high or swing low to avoid getting stopped out by minor fluctuations. And just as important, your position sizing. Always calculate good risk to reward ratio before entering a trade. And then last but not least, waiting for your confirmation. Don't blindly enter your trades. Look for candlestick patterns or other signals that confirm your entry. Now for the bonus, how I use gaps in my strategy. I trade a little strategy called supply or demand. But when you're looking at gaps, I'm just looking for gaps to get filled, retested, and to shoot back in the trend direction. Because price often revisits these gaps to refill and to rebalance the markets. This retracement provides an opportunity to trade the move. After I identify a gap, I use the market structure to see if a breaker structure or a new swing high or swing low is going to be created. When trading, here's the 3 things I look for. 1, market structure. They say that 80% of gaps get filled over time, but not all of them are good setups. I added on my market structure Confluence to make my trades more precise and build better confidence. Step 1, identify the gap with the breaker structure and market continuation. Number 2, entry signal. Even after that, I still need my entry signal, so I know when to get in and can avoid a lot of fake outs that occur during these times. The whole idea is that if you imagine that the institutions are the ones that move the market, so when they leave, they want to come back and get their friends. So they come back to that level to get retested, and I just sneak on the bus for them to continue back in that direction. That's all that trading the gap fill and supply and demand strategy really is. If you're interested in more and want to learn more about forex trading for free at this very time at my MTF Discord, where I break down the basics so you can start trading and start making money with us immediately. And it's also 24 access to me. I'll be up at weird times and don't have a set sleep schedule. So I remember helping students and answering questions at 3 a.m. Eastern Standard Time. So if you're someone who trades London session or would like to, 9 times out of 10, I'll be up for help. But if you're someone like me who can't quite do that all the time, then 8 to 11 a.m. Eastern Standard Time, me and my pals are on the charts. My goal is just to create 1,000 plus profitable traders and give them the opportunity to day trade full time if they like. So now that you know and have a good understanding of what gaps are, let's actually hop on the charts and let me show you a few examples. As you see here, the time of this recording, it's February 24th. And in real time, we actually have a gap being created. If you look here, we have a strong move upward, and you can see that nothing was tapped within the zone. That's our gap. So if I marked out our gap here, this is exactly what it would look like. From the bottom of candle 1 to the bottom of candle. So candle 2 in the middle there, in between candle 1 and candle 3, we have our gap. And over time, as candles start to come back in and close our gap, we will slowly close and close until it's filled. How I draw my zones is from candle 1, where that move started. So we're in an up market. For you, your candles might be green, but for me, they're gold and black because I trade gold. But for you, wherever those green candles really started moving, you go to the first red candle beforehand and mark up your zones. So for me, it would be this black candle here. Zone marked up. I'm on the 5 minute here. But while that's happening and I'm waiting, let's look at some other examples. As you can see here, let me rewind. I'm on gold still. We've had a big impulsive move up, leaving an imbalance and no candles overlapping. From candles 1 to 3, we're looking for candle 2. Candle 1, candle 3. This is candle 2. And our gap would be this area right here. Now we would patiently wait for candles to come back and fill our zone. Let's fast forward here. Boom. So our gap's finally starting to get closed. Zoom in here for you a little bit. Gap got closed a little bit. Still waiting, still waiting. Gap got closed a little bit more. and then boom, our gap got filled. Now this is where entry signal and confirmation comes into play. I wouldn't have hopped into something like this. First things first, I didn't even have my zone marked up. But say I did, it would look something like this. And as that gap got filled, I'm waiting for candles to tap my zone, which it first did here, and I'm waiting for break of candle for my entry. But as you see here, this candle did not break back up. This candle did not break this candle's high. And then the candles just started going down and down with no break of candle, showing that it wanted to keep going back up. For a trade like this, I would just wipe my hands and sat on them and called it a day. Just checking back in on our live trade. Our gap has not been started to get filled yet. We just stay patient and wait for that to happen. But while that's happening, let me show you an example in a down market. As you see here, now we're on NAS and I'm looking for sales. We look for our 3 candles. We have a repulsive move down, breaking lows, showing kind of a trend reversal. Now we see the 3rd candle to leave us with a gap. As you see here, no wicks or body has overlapped this area, and our gap would actually be marked out just like this. And now that I have identified that I have a gap with the trend reversal, now I would draw off my zone. Now that I have my zone, me personally, I don't need my whole gap to get filled. I just need my zone area to get tapped. Our gap got filled a little bit, and I also have a zone tap. And in that same candle, it also gave me my break of candle. You have to be fast acting, especially when you're on the 5-minute. It started to reject hard, offer EMAs, offer zone, and offer gap. As it came back down here, I will get in at break of candle. My entry would look something like this. Stop loss at the swing high, and of course my take profit at 1-to-1. As you see here in real time, my take profit would have been hit in 5 to 6 minutes. Now this is just the tip of the iceberg. In a few examples, if you need help or want to go over some charts one-on-one or in the group, go ahead and join the MTF community, and we can hop on the charts anytime, and I can show you until you understand it.